So we're here at about the midpoint of the year, right? June. And at this point, a lot of us are looking at our New Year's resolutions and wondering, well, shoot, I failed on this one, and actually maybe this one, and this one, and this one too. But maybe there are a couple that we're doing really well on. Maybe we've been fitter, making it out to the gym. Maybe we're actually doing a little better about contributing to all of our retirement accounts and meeting with our financial advisor to make sure we're doing it in the right way, right? Well, one of the things that doesn't get talked about enough is that you want to look at where your assets are actually located as you're contributing for retirement. Now, this is particularly important if you're a business owner, in part because one of, and probably your largest asset, is going to be your business. But the other assets in that portfolio are probably just as important and probably more tax sheltered in some ways than that business. But this applies to business owners and non-business owners alike. So what I want to talk today to you about is the Mega Backdoor Roth contribution and how it can play a really important role in your retirement planning, and especially how important it is here in 2024 and also 2025. Hi, I'm John Norbert, and welcome to the Financial Prof series. So you probably heard of a Roth IRA or a Roth 401k, right? What is it? You put money in and you don't get a deduction on it, but years down the road when you take it out, not only has it grown tax-free, but those distributions are also tax-free as well. It is, if you will, one of the most tax-advantaged accounts out there. However, we're limited in what we can put into that Roth IRA, right? So for most of us, if you're under the age of 50, you can put in $7,000 this year. If you're over the age of 50, you're going to be able to put in an extra $1,000 or a catch-up contribution for a max of $8K this year in 2024. But you can also contribute to your 401k, right, which is more powerful typically in terms of contribution limits. In there, you can put in a total of $23,000 if you're under the age of 50, or $30,500 this year if you are over the age of 50. Now, this does not count any employer contributions or profit-sharing contributions, etc. So here's the thing. I'm going to give you a little scenario, a little story, if you will, about how you can actually truly max out this benefit, which is the employer retirement plan. For instance, the 401k. We use that one since it's one of the most common. So let's say you have a 401k, and let's say you're a business owner, and let's say that in addition to growing your business, you're contributing the maximum to that 401k. Let's say you're under the age of 50, so that's $23,000, right? And then let's say you have an employer contribution to that, and let's just say for easy math that employer contribution brings you up to a total of $30,000 in that 401k. And maybe there's a profit sharing contribution on top of that. So again, let's do easy math, $5,000 we'll say, so total of $35,000 in that 401k at this point. And let's say we've done that as far as possible on the Roth side of the house, so that those assets are, if you will, most tax advantaged for our future years. But did you know that you are still leaving money on the table in terms of what you can put into your Roth 401k or your 401k in general? We've maxed out two types of contributions at that point. One being your contributions as the employee of your business, and two being the employer contributions through both the specifically employer contribution and the profit sharing contribution. And that's gotten us to 35. But there's room left. In 2024, you can put a max of $69,000 into a 401k, Roth or otherwise. And the way you do this is through after-tax contributions. So it's a lesser known form of 401k contributions, but you can do this with pretty much any 401k. You want to make sure that the plan is set up to receive these assets, and if yours isn't, give us a call. There's a pretty good chance we can help with that. But the way that this works is, as long as it's under that $69,000, you can put as much as you want to between those buckets, and once you've filled up those first buckets, then that after-tax contribution is what comes into play. So for most people, this is going to be, tens of thousands of dollars left on the table. If that's the case, then the Mega Backdoor Roth contribution works like this. So you max out your 23, that's your personal contribution. Then you max out the employer contribution. Of course, that's based on whatever rules you have set up for your 401k. The profit sharing contribution, if there is one. And then whatever else is left over between that number, again in our case $35,000, and $69,000, so again in our scenario, that's $34,000 additional dollars, would be an after-tax contribution. Then what you can do is turn those after-tax assets around and convert them to Roth. There will be a very little tax bill on converting those after-tax assets if you do it right away, potentially, because you won't have much, if any, growth. Now, at that point, you've got, potentially as much as $69,000 that you just put into a Roth vehicle in 1 year. That's powerful. And the reason it's particularly powerful here in 2024 and 2025, like we talked about in our last video on Roth conversions, and actually a number of videos I've mentioned this year and next year are the last of the Tax Cuts and Jobs Act. Once that Tax Cuts and Jobs Act expires at the end of 2025, that's it. Almost all of our tax brackets are going to go up. And when that happens, any income we're recognizing, including through things like Roth conversions, is going to be substantially higher as well, or at least higher than it was. So this year and next year are really good years to consider not just Roth conversions or Roth backdoor contributions, but mega backdoor Roth contributions as well. So again, if you've thought about that mega backdoor Roth contribution, or maybe this is the first you're hearing of it, whether you're a business owner or not, give us a call or drop us a line. We're happy to have the conversation with you, see if it makes sense for your financial goals, and then help you through it. It's kind of a complicated process, but it's certainly not insurmountable. It's easier working with someone at least the first time. Let us give you a hand. So again, drop us a line, and in the meantime, like and subscribe, and we'll see you out there.